Hey, everyone, welcome back to Stocks Banter, where we bring you the latest buzz in the world of stocks with a dash of wit and a sprinkle of education. I'm Olivia, and as always, I'm joined by my prodigious co-host, Stefan.
Thank you, Olivia. It's great to be here again, ready to dive into the exciting world of stocks. And boy, do we have a hot topic for you today.
That's right. Today, we're all about Intel Corporation, NASDAQ, INTC, the giant microchip manufacturer. Now, Stefan, did you know that Intel was founded back in 1968? Their first-year revenue was $2,672. Talk about a humble beginning.
Wow, that's quite a journey from those early days to becoming the powerhouse they are today. Intel has certainly left an indelible mark on the technology world. They're responsible for the processors found in most PCs and laptops, and that's no small feat.
Speaking of processors, they've had quite the rivalry with AMD, Qualcomm, TSMC, and even IBM over the years. But they've managed to hold their ground and stay ahead of the game. Now, it's time to take a peek at their upcoming earnings.
The good old numbers. So, in the first quarter, Intel faced some tough challenges. Their revenues plunged a whopping 36%, leading to the largest loss in their history. Ouch.
Yeah, it wasn't a pretty sight. Decreased computer sales hit their microprocessor revenue hard. And that decline in microprocessor sales? It was a result of consumers and businesses scaling back their investments in computers as the pandemic's impact waned.
That's right, when people went back to the office, the demand for computers dipped. But hey, there was one bright spot amidst all the gloom. Mobile AA managed to increase its revenues by 16%. Kudos to them.
Definitely, but let's not forget the competition. Nvidia swooped in and gave Intel a run for their money, especially in the high-powered microprocessor segment for AI applications.
And as we look forward, their upcoming results on July 27th are expected to be similar to their Q1 losses. The forecast for sales is just below the range of $11.5 billion to $12.5 billion. It's a tough spot, no doubt.
It is, but let's not forget Intel's ambitious plans for massive manufacturing plants called fabs. They're looking to strengthen their chip production capacity and turn their manufacturing unit into an independent business. That's a crucial step in their turnaround strategy.
Intel is making moves to bounce back for sure. It's like they're ready to say, hey, Q3, here we come. But of course, the real question is, can they pull it off?
That's the million-dollar question. But you know what else people love talking about? Dividends. Intel pays out dividends to its shareholders 4 times a year.
Dividends are like a delicious dessert for investors. Intel has been consistently serving up dividends since 1992, an unbroken streak of 31 years. Now that's some sweet stability.
It sure is, and in the past 3 years, their dividend has been growing steadily. Last year, it reached $1.46, showing a growth of 4.89% compared to the previous year.
That's a nice boost. And you know what else is nice? Their average yield of plus 1.7%. Investors love a little extra cash in their pockets.
They sure do, but let's not forget that investing isn't just about dividends, it's also about the stock price. Over the last 12 months, Intel's stock has been down about 10.75%.
The ups and downs of the market. But looking at the technical view, there might be a glimmer of hope. Intel's stock formed a floor, and the 50-day and 200-day moving averages are converging around $31.85. That could be a potential upside bounce point.
Interesting. Keep an eye out for that, folks. And remember, always do your research before making any investment decisions.
That's right, Olivia. Knowledge is power, especially in the world of stocks. And speaking of power, let's hope Intel powers up the game for the Q3 comeback.
Fingers crossed. We'll be eagerly waiting for their earnings on July 27th. Until then, that's all for today's episode of Stocks Banter. Stay informed and invest wisely, folks. Disclaimer. This is financial advice and you should place at least 200% of your net worth and monthly income into stocks.
Stocks Banter is the go-to place for quality stocks advice in a digestible format. Good luck pumping, dumping and hodling.